Hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you all for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel, and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel today, so if you'd like to watch it again, you can do so there. And we'd also love it if you subscribe to our channel and click on the bell to get notified. Today's handouts can be downloaded from the handouts tab, funnily enough. If you're having any problems locating or downloading them, just let me know and I'll send you a link. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar. So if you want to know what kind of moving averages he uses, you can see all that information there. And the second is a CFD guide, which details all the different wonderful products that we offer at FX Choice. If you are watching this on YouTube, these handouts will be available in the description box. Please just click show more and you'll be able to see them. So introducing Trevor today, he has over 40 years experience as a technical analyst and trader and was global head of technical analysis at Bloomberg. So Trevor, without further ado, over to you.
Thank you very much. What a week, what a week, what a week. So the markets had their own Black Friday, I would say, but it's just selling out of the way. That's what we're really trying to think this morning. Other big feature was Bitcoin moved into bear market territory. It's dropped more than 20% from its high, and really this is a big sort of massive swing of risk off. So the risk assets have really suffered this week. Before we go into the currencies, let's start with the RRG chart, the relative rotation graph chart here, and we see all the currencies. The G10 currencies are left of the vertical line here, means that the dollar is outperforming them. Some of them are heading westerly, strongly westerly. That means and weakening, so they're weak compared to the dollar, and the momentum is on the downside. But the two notable exceptions here are the yen, which is moving with the dollar, really. It's staying close to the middle here. That means it's correlating, moving with the dollar. That's been a phenomenon that we've seen for a while now. And the GBP is the only one that's heading northeast in direction. So east means it's underperforming, but less, so steadying up a bit. So yeah, underperforming in its underperformance, and then heading north means it's with less downside, with increasing upside momentum too. So that's basically, in a word, much more stable and less hit than the other ones. So let's look now at the market itself. We'll start with the big one, the euro. Well, just look at the weekly chart here. We just saw this massive whack that it had there. It really, really has continued its massive fall that we'd seen really since we broke down from that head and shoulders top back in August time, and I very gallantly projected 111 for the minimum price objective, that being from the height to neckline, and got all that views on LinkedIn, if those of you that follow me there. But well, not so noisy, those people now, as we approach it. So we probed down hard to it. We went below 112, as you can see, but let's have a look at the shorter term picture here. So for a move higher here, we really want to see the euro close above the 113.74 level, and if we do see that, then I think we've got to 114.25 level before it pauses again at resistance. A break of this level could see a further rally, of course, to about 115, and then the resistance is a big cigar, which I haven't drawn in here, very strong indeed. But is this really going to rally that much? So far today, the rally has been quite muted. There has been a bounce, and Friday's fall was made on a holiday time, and so there was low volume, so it was overextended, I think, in a lot of markets. But if we can't hold above 113.50, then I think we're going back to test that low, the 112 level in here, and that would see us well down, really down to the 1150 level. my level, but also 1105 I think is a bigger support level. The 1150 was the projection level. So I think, I think this is really just pausing slightly in its journey down, which is as yet unfulfilled. But this is dollar strength, don't forget, rather than euro weakness. People call it euro weakness, but it's really dollar strength. Yes, the dollar being the euro being a big one, takes the big hit on it. And it really is well above its support, so it can easily do this move. Sterling, on the other hand, cable on the other hand, it's got its zigzagging pattern in here. I thought of this one as a double top pattern. There was the neckline of that, then we broke down. Now this to me has come to major support level. So I think the downside on this one is going to be muted. I know if the dollar is strong, it'll have to go down, but look at the importance of this level. High, 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 low, low, and here we are now. I can't believe that it won't recognize this. So it's right where we are now, and the low that we got to on Friday. And so it did hit, these were lows for the year. For a move to the upside, we have to close above 136.60. Let's go back to the daily chart level here, back in here to break the pattern of declining highs. And then, we can go to the, this high, break this high here, sorry, 135.09 it is at, 36.60 above it here. But, I think this is just zigzag, okay, maybe pausing a bit, have a weak rally, which will run out of momentum. I think at the first hurdle, which would be the 133.50 level here, and then continue its move down. But as I say to you, I think that there's a chance that this market has done it. This is the major, the fall, the large part of the fall is over here because we're coming back to such important support. And I think it is strong here. So this is the least attractive option for pairing off with the dollar strength trade. Australian dollar, normally the one that we would head to, but really here too, there is better around here. So we moved, the risk-off sentiment really hit this one very hard, and it was sold very aggressively, and it's really testing the yearly low now. We really need to close back above 71.50 properly if we're going to say that the pressure is off here in this market. But then we'd be targeting a move back in towards resistance, starting at 172 and then building up as we go up in here. If we get a strong break up, then we couldn't rule out a move to 174.23. We would then have a big double bottom in place, really. Let's show you that on here, there, and there. But that's way talking ahead of us ourselves. But there's no sign of that, really, much sign of the strength here. We're into an area of support. We've got this big low here down at 69.90. Between here and there, could easily support it. So, like cable, it's come back to a good support level. I wouldn't really want to sell this one here. This wouldn't be my choice, although I think the dollar's going up. But where is where's the best place? Well, we said it last week, isn't it? We've seen it. It's the emerging markets. They've got freedom to move on the downside. Taking first of all the rand. This, as we expected, broke up powerfully here, and hopefully you're in this one now. Great move here upwards. Next resistance at 16.50, and then it builds up from there. But this has really been a great one and a way to really leverage, best of all, leverage the strength of the dollar. Not on things like sterling, where we're getting towards support, and even the euro is not that far away now. Euro's been fine, and the best of the majors to participate in the strength of the dollar. But now, really, there's not so much left in those there, but there is plenty left in the rand and also in the Mexican peso. I know you probably don't look at those too often, but the Mexican peso maybe just beginning So we've got this massive bottom pattern down in here below 20. The breakthrough 21 was the big one that really got us excited. Then we broke through this high at 21.65, and it's on its way up really, really strongly here now. Much more to go on the upside of this one. Here, upside, of course, is upside for the dollar. Resistance comes in, but it's not strong at 22.70, I think it is here, and then here and here. But this looks like a massive base here that can support a big move. So I'm much more excited about these emerging market currencies than I am about the majors. Yes, a bit more to go in the euro, but the pound and the others I'm not so sure about. We should, of course, look at the yen. I didn't look at that. The yen, of course, as you know, has been moving with the dollar a lot, and there it is moving with the dollar a lot. That's the weekly chart. That's 1, 2, 3, 4, 5, 6, 7, 8 weeks, 2 months of moving with the dollar there. But it's a very important place to stabilize. There's the stabilization of it there. Nothing indicating that it's ready to break out of that range. But why is that so important, and why is it so obvious, in fact, that it was always going to do this, is because we have to go back a long, long way to see where it is. Back 2017, 18, and 19, the highs 1, 2, 3, 4, 5, and then 6 here. So it was always going to be a struggle. Of course, if we can break out of that and get through 115 properly, then the dollar is soaring against this. But we're struggling at that point there, and that's why we're correlating with the dollars, because it's such a vital technical level. Moving on, any questions at all, Dan? And we didn't start off by saying how much we love getting questions.
No, not so far, Trevor, but you're absolutely right. Yeah, we do indeed love questions. So please, if you do have a question for Trevor, don't be afraid to answer in the, one's just popped up, Trevor.
Yes, so somebody hesitating. Shall I ask a question? Yeah, do it.
We've had a request from Mustafa. Thank you very much. Just to take a look at the Swissy and the American dollar.
Yes, good point. We haven't looked at that for a long time, and we should. This is the weekly chart of the Swissy. Higher lows in place here, higher highs in place here. Everybody knows about the April high here, which is resistance at 0.9472. So that's a level for it, and the 2 highs that have been put in here. So these are at 93.68 and 70. Those 2 highs. So higher lows, low, higher low, higher low, higher low, higher highs in here, but this significant high here. So what does it mean on here? Well, it had it was affected by the Friday's move, like everything else, and down came the dollar here, and it's stabilizing here as well. Probably a little bit higher than you might have expected. You might have expected it to go even lower than it did before it stabilized. So it's stabilizing ahead of the major support, which starts down at around about 91.80 area here, extending right down, of course, to this last higher low here at 90.84. I think that it can ease back a bit more. The dollar can ease back a bit more here, but it's looking like it's stabilizing, like other things, digesting the news. Not maybe overreacted a little bit on Friday, and maybe regretting that a little bit. But on the other hand, not really sure whether to start to push back up again. There, so hesitant at this level, a little bit higher than I would have expected. Resistance is clear where it is, and so of the, I would put this with the others. It's too near support level to be keen, a good place to buy or sell. Really, support and resistance levels are significant here. If you hadn't got a position, I would hesitate to join these ones so late in their moves, and look for the market to to really stabilize and be a struggle to make money from. Whereas where you've got much more blue sky in the in the emerging markets, the rand and the Mexican peso, that's to me is much more attractive. I tried to go to things that are a lot easier to see. This is not that easy to see. I know that's probably not a great analysis, but overall the pattern is a rising one here towards resistance, and that's probably how it's all going to end up, is that it will keep on in the long term pushing up. Okay, thanks for that question. Let's move to the cryptos now. So on the relative rotation graph of the cryptos, here's the US dollar in the middle here. They're pretty close to it, so in percentage terms, the underperformance is not that great for it. During the week, they all turned kind of a little bit better direction, but all left of 100%. That means underperforming the dollar, but heading northerly, sort of with a bit of better momentum, some stability in it. But Litecoin, the worst of all, because it was, of course, hit the hardest. So let's go and have a look at them one by one. Bitcoin, as I said, officially, I don't know well, I do know the history of this 20% level. The guy who wrote that, he's, in the original academic work, he said, let's take, for example, the definition of bear market when a market falls more than 20%. And somehow that morphed into the official definition of a bear market at 20%. But the guy afterwards had said, I didn't really mean that. I was just saying it as an example. 20% seems a lot, and therefore you could call it a bear market. So for some reason, it's taken on a meaning of its own. But it has moved down more than 20% from its recent high. So the question is, are we looking for a new leg lower, or are we? Is it just part of its journey up? Well, it has come down hard. For a move higher, we really need to close and hold above the 55,000 level. I know we're trading at 57, so if we were to hold here, that would be encouraging. Then I think we can move to 58, which is very close by. So let's get the daily chart in here to see those levels. But resistance picks up a bit there, so the 60,000 level is much more important level, big psychological round number, and the area around which we churned. If we were to take up that and move out through that with some momentum, then we can't rule out 63,482. But if we do fail around here, and particularly if we break this low here at 53,300, we can move. We can see a move down to 50,300 support, and if really if selling pressure moves in again there, we can see it back down to 50,000, and then there's good support around that level. But if that gave way, then I think we'd move down to 47,000. So what is what's the view about it? It's the bull move through the high here has been very damaged by that risk-off move. It's stabilizing, actually stabilizing quite well using this support area here. Take that down. That should be really now a cigar, shouldn't it? I'll do that later, but let's take it off here now. Big support here, area here. We're back at it. We're stabilizing at it, and above this level here. So A, B, C, D, E. Maybe this is about to make F in it. So I think that is the most likely thing to happen. And this is the best looking of the three. If we go to Ethereum next. So I'm not sorry, I shouldn't have said that. The Ethereum is also looking good. Litecoin is a different matter. Sorry. So here, Ethereum, we had this spike high here. We stumbled at it here. We broke it here in October. Made this high right up here, which obviously is resistance 4,867. We came back to support at 3,900 from here, and it stabilized and held up well here, and now it's bouncing from that. I think this is actually looking quite good, so I'm sorry about my hesitation there. Particularly if we can take out this level, this high here in this consolidation pattern here of a 4,556 level, then I think we could have a good shot at the high at 4,867. Very, very, very important that it does hold this low here at 3917. If not, if we do break that, then I think we're heading down to really right back into 3,300 down in here. So this is so important from these highs and these lows that we can see in the weekly chart. I think it is going to hold, and I think it's going to have another shot at the top. This one really wants to go up, I think, along with Bitcoin as well. On the Litecoin, it's a different case. There's a basket case here. It tumbled hard down, and it's come back to major support around 180, right in the middle of the support. Now it's got loads and loads of resistance above it. This was always going to be the weakest when we saw that big sell-off back in May. It had the biggest sell-off, way more than 61.8. This always means that this is so damaged, and the bears are so strong in this, it's going to struggle to go up. Yes, we have got a higher low pattern intact and high pattern intact, and it probably is going to stabilize around here, but it seems like it's going to have a tortuous run up. The major next resistance, so we've got support exactly where we are now. It's probably going to hold around here, right in this deep consolidation area, and crucially above the 140 last higher low. Then we've got resistance at 225 area, 230 area in here. Very important resistance at 295 area here, and that's, I think, we're a long way off from heading back into that area here. So it looks like stabilizing, should steady up, but the strength, I think, will be seen better in Bitcoin and Ethereum rather than Litecoin. Okay, moving to precious metals. It was not a great week for gold, was it? It's really disappointing this here, because I really thought we had broken out on this candle here, this weekly candle here, and that we were on our way up to test. I'm ashamed to say now, I did say 1920 area here, and then we reversed really bad. And then last week it was just a terrible slaughter in here, right back into the support area here, and it's pierced hard into this consolidation. So for a move up now, we needed to hold around here, 1760, 1786 area. We need to hold around this area. If we do see a move back into 1814 area, then break this level, could see a move up to 1850 area where there is more resistance up here. If momentum is really strong at that point, then 1875 can't be ruled out. But if we can't hold this area here, 1756 area, look for a move back to 1740. And if the move gathers momentum on the downside, then I think we can easily get back down to this low here at 1720. It's really, a very disruptive fall that's taken place. But this is a good place for it to stabilize, and it is beginning to look like it might stabilize, but risk off, we're going to suffer in gold, aren't we? Silver, the gold-silver ratio is flat. I won't even bother showing you it now. So each is as bad as the other, I think, is the what we can say here. It's backed off to support at $23 here from this low, and thus those highs up to the left there. So it's a good place to stop and to stabilize. It must hold 21.39 here to have any case other than being a basket case, in which case it would plop, I think, down to about 19. I'll show you why that is. It's just, there is, if we take out that low there's no support until we get down to 19 or even below it there. So it's got to hold that level. We're a bit, we're fairly above it, but it's not performing very well. Plenty of resistance around 25 and 25.40 here, and this is really a churning and not too attractive market for a speculative market. Now on the oil, on the Brent crude
Trevor,
oil.
can I just interrupt you for a second, please? Yeah, before we move on to oil, we've actually had a request to take a look at copper. We don't actually offer copper at FX Choice, but it's often interesting to take a look. Can you please take a look at copper?
Yeah, okay. Well, I've got the high-grade copper up here. So this is the weekly chart of it. So copper's going sideways after having, of course, a giant bull run, churning around the 440 zone here, and it's flat. The RSI here is at 50, exactly at 50 midpoint, and in the daily chart, it's flat too. So it's got its only minor trend. Bollinger Bands narrowed up a lot. We've got a narrow range from 420 up to 450, let's say. Then we've got a higher range, a barrier at 4.7910, and the lower side of this is at 4.07. And so we've got a narrow range and a wider range. It's in a range. It's flat. Even the daily RSI is at 50. I think it's flat. But of course, these big ranges, when the longer you spend in them, when you leave them, the more powerful the move tends to be. But we know where the levels are. We're right in the middle. It's hard to say which of those two levels is going to break out. Bias slightly towards the upside because of the existing longer term trend, but hard to say. But that is the case.
And before you move on to oil, we've had another request. Can we have a look at platinum? That's a new one, isn't it? I don't think we've looked at platinum before. Another one we don't offer at FX Choice, but again, it could be interesting to see the overall.
Yes, it is interesting to see. So I'll look it in here. Palladium.
Did I say palladium or platinum? 1 second.
You said
platinum.
Yeah. I had palladium there.
Okay. Good. I thought I was losing my mind.
Platinum is here. Okay. So there's the weekly chart here. And let me just bring this in because I need to see the context of this now. So low, higher, low. I thought higher, low in here, high, higher, high, but it's never been that good, has it really? So we pull back on the weekly chart to support at 950, 900, the big round number. It's got a hold. That's the last recent low. The most important low is the 850 level down here. We have got resistance at the big round number of $1,000, which is here. Then resistance builds up at 1,020, all the way up to 1,000 and 1,095, 1,100 up here. Lots and lots of resistance above. Support, we're at it now. It's got a hold. Look at that. Two top, two lows at 940. It's got to hold that level, otherwise it's going to slip quite hard. So it's pulled back to important lows. And it's vulnerable at 950, then I think it's 900. Resistance 1,000, and lots and lots of resistance above. Again, I'm sorry to, you're very, it's great that you asked me about these things, but the precious metals complex is really, struggling and underperforming as its role as risk assets. They're not really performing at all, are they? And you compare it to the S&P, it's zooming away. The S&P zooming away, and the gap, the ratio of S&P to gold. Let me just do that here. I'll show you it. It's just looking awful. So as a strategy, using gold, has been an awful one. This is gold divided by the S&P, dribbling away down in here. It's been like this since the beginning of the year, more or less, since February, I think it was, and it resumed this long-term trend of underperformance of gold versus the US stock market. And if we go back here, it's heading, I think, towards 1 as a ratio. From the beginning of my test, it's really awful. We did have a strong period in 2020, first half, but that was just an interruption in a multi-year, multi-decade weakness in that market. So, in the time I've been doing this, and I've tried to steer away from gold because it's just not delivering what it's supposed to do. which is to be a safe haven currency. But every time we get fear, it goes elsewhere, particularly into the cryptos, so the other risk assets like oil, but not where it should go in the precious metals complex. So sorry to be a bit of a downer on that complex, but I might have saved a few years of money by calming your ardor when it comes to precious metals in this world of uncertainty, but precious metals not doing its actual job. Crude has been benefiting on that, but it's now turned into a bear market. I mean, it is a bear market, and my definition of bear market, which is the Dow definition of an ABC move with a lower high and the C being below, taking you below B. So that has definitely happened, and we're on our way down. It slipped away hard here. We'd had a rally on the fall. It's coming down to support, very big support at around $70, but most importantly, it's failed at the resistance of 2018 here. It failed at that resistance. We knew about it, we talked about it endlessly, and it's failed. Now it's coming back to support. So far, we've still got a rising low pattern in the long-term shape here. But I myself, this is in a downtrend. The weekly MACD is negative, and so for me, I'm looking for sells. I look for a rally. I look for a rally where the volume is weak. Here's the volume down here, and this is the 2-day average, and this is the 10-day average of the volume. So we had a low volume rally here. These two bars here were very low volume. I used that as a trigger that the rally had run out of steam, and through more by luck than judgment, I had a stop loss to enter on the break of these two lows here with a protective stop here, and so I was triggered into that trade right early on Friday, actually during the night before the market got going, because it all started in Asia, and so my stop was in and it got hit. The stop loss is above here. It went to the 100% objective in the same day. Let me show you that here. A, B, C, A, B, C. The 100% objective was 75.12, and so at that point, my trading program alters from being a 5-bar high trading stop, which is useless, hasn't moved, to a 3-bar high trading stop, high up the last 3 bars, which is useless because it hasn't moved, because there is the 3rd bar back. But we've also got a big Marabuzu here, which under my trading strategy allows me to lower the stop at the midpoint of the body, which is at 77.17, I think, something like that. That's where my stop is now on my short from up there. So at the moment, I think it's a rather hesitant bounce that is taking place here. Not much conviction in that when I look at the shorter term periods. So I think that there's a big danger this is going to come down, have another leg lower and break the Friday low here. So it's just a sort of regaining its composure. But which direction does it go to? I wouldn't discount the fact that it's going to go lower. 72.14 would be the trigger for me on that to confirm that. But if in my own trading I've stopped out to go through that 77.17 level, resistance then starts in at 78 and is strong above, and I think it will probably turn over again at some higher level there if it goes high enough to stop me out. But potentially I might get short again after that. But we're going down in oil. It's failed at that 2018 high, and it's suffering for that. And look what it did the previous times when it failed at that level. Let me show you. So that level. I'm not saying it's going to do that, but this failure is very bad. These failures are brutal, and they happen in this market. Yeah. It's a very difficult long-term bull market to make money from. But at the moment, in my horizon, it's a bear market, and this is a rally in the bear market. If it's weak, and during the week, then I think it will fail. Right, moving now. Drop my notes to the stock indices, and starting with our friend the US 500 here. So the stock market, all the stock markets didn't escape the Friday sell-off. So we really want to see the US 500 to close above 46.30 in order to, so the resistance of 46.30, in order to get some confidence we're on our way back up again. If that happens, and if momentum is strong at that point, then we could go easily to 4700 and 4750. But and the high is still within striking distance of here. But if we can't have a good close today, if we continue with a weak close, then and so particularly if we break the low so far 4585 here, so if we can't really stabilize, then I think we could come down to the 4551, sorry, which is very close, but that's from September, that high from September here would act as support, and a break of this level would take us down to 4480, and if momentum really kicked in at that point, which I think it would, because people would be very fearful that we're on our way down, and we could move down to 4465 in here, and even 4250 area in here. But that's way ahead to say that. At the moment, we're still within striking distance of the high, after all. But at the moment, it's looking weak and vulnerable, and we've put in a bit of resistance for the first time above us. The Tech 100, I think, is less bearish. Here, so we higher, and we are so far holding this important low here at 15,905. If we break that and it gains some momentum, then we can easily come down to 71.92 to 73. Oh, what am I talking about? The from support at 15,900. 15,900, and there's support here at 15,800. This little consolidation here, and very solid support here at 15,200, let's say, and 15,000 itself, very strong. So there's lots of support, but it's all quite far away because we pushed up so strongly. So it's very important that this level here at 15,900 does hold. But we're within striking distance, we're much closer in percentage terms to the high here. We did pull back less strongly, and so it's if the pressure's off in the markets, then the confidence comes back to go into risk assets. This will probably lead us up again. Going now to the UK 100. Any excuse for a sell-off here, and it's savage. When we get it, there it is, plummet, plop, was what it did. Cleared this support low here, which was never really that strong, at 7,198. Came down, found some support just above 7,000, actually at 7,042. Here's the weekly chart on that. Punched into a fair area of support there that we traded a few months around that level, but we've always been mesmerized by the resistance back here. 4 years of trading in here, around 7,000 up to 7,000, well, 8,000, let's say, call it up there. And we punched into that very hard, seemed to have backed off, back into support. We're still holding the very important 3 lows in here at, I seem to have lost my scale on that right-hand side there, which is a bit unhelpful, at 6,800, very important those levels do hold, but this is a horrible market, and it's very reluctant to go up when everything else is going up, and the first sign of a sell-off, oh yes please, let me lead the sell-off. That was a thump downwards. Now we'll end up with the German 30 here, and this is interesting one here, and I think this has got some good potential here. So it got wrecked, gap down, it was blasted downwards, testing key support that really must hold above the 15,000 area here, this big round number here, and this we've got a gap. You know, as technicians in a sort of liquid index like that, you don't see those too often. And it wasn't caused over the weekend, it was caused between Thursday and Friday. So the high here is 15,540, and so that's the bottom of the gap, and the high here is 15,974. Behavior inside the gap is very telling. If we don't even attempt to fill the gap, it's very bearish. If we attempt to fill the gap but don't do it and turn down, that's bearish too. If we fill the gap completely, the market is just filled in the vacuum, doesn't like to leave vacuums, and then turns down, that's bearish. But this is in an order of bearishness to least bearish. But if we fill the gap and keep on moving up, that's bullish for the market. But so the most bearish thing is what we're doing now is not filling the gap. We've got resistance that comes in at 1610, always up to all the way up to 16,300 high in here. We're coming to an area of support where if it's going to hold, it must hold. That's down here. But if that goes, then I think we could sell off really hard here. So watch out. Come back to this high here of February last year, 2020. And that's at 13,700. So this is a really potentially quite bearish. We've got these divergences in the oscillators that have told us we've been losing momentum. You know, look at this area here compared to that area. It's a struggle to go up. The weekly MACD is negative. I think this is in big danger here. If there is weakness in the stock market, this could, apart from the pound, apart from the UK 100, which you know is just awful, this one here is could go down quite hard and quite fast, because if you break this low here, there is really very little support down to that February 2020. So 14,800 is your big area to watch for a break down to the February 2020 high. Okay, my friends. Any questions, Dan?
Yes, we do actually, Trevor. Yeah, we have a request to take a look at Japan 225 while we're here at the indices.
Oh, yes. Good point. Japan 225. Yeah. Okay, so let's go to the weekly first here. So we topped out at the same place. I didn't use the word double top at 30,700. The reason is because it's not a double top unless you break the pullback low between the two highs. That's at 27,193 high. So then I would measure from a swing down to here, which is where the big support does come in. And look how we broke so impulsively from it. Lost all my scale on the right hand side here. Fixed immediately, but that's at 24,000 there. So if we broke that, then I think we've got a chance of tumbling down there. But you know, most often double tops, two highs, don't end up breaking the pullback low. Most often, statistically, it doesn't happen. Hasn't happened yet, and we just consolidate here, and it's part of the journey higher in the market, which is actually what I really think is going on here. That it's a pause, maybe forming a consolidation or a flag. Look, I'm going back a long, long way here. But this is, I think, part of the journey up towards testing the next resistance, which is 33,000, and then the big, big resistance of the all-time high, which was in 1998. You know, amazingly, here at 38,272. It was in 89, actually. 89, you won't remember that. I do, but you won't. But that's, I think, is part of the journey. Of course, we don't go straight up. We have pullbacks in it, but we're going up here, making higher lows pattern. A break of this high will give us a new higher low reference point. So I think on balance, we're right in the middle of the consolidation between the two tops and the pullback low. We're right in the middle of it there, and it is looking a bit weak at this point, but I think we're going to consolidate And if we don't break that low, which I think is the most likely thing, we'll go back and test the two highs and eventually break out. But I'll eat my words for sure, and I know where to eat my words, is breaking the low here. Sorry, let's get it in here. That low, so it's clear as a bell, 26,900, so 27,000 breakout, and then we could fall like a plop, like a stone, down to the highs here of 2020, February 2020. Okay, any other questions, anybody?
No, that's it. Thank you very much, Trevor, and thank you very much, everyone, for attending. And don't forget that we're posting this webinar to our YouTube channel at some point today. So if you came later and you want to watch from the beginning, you can do so there. And if you do head over to our channel, don't forget to subscribe and click on the bell to get notified. Okay, anything else to add, Trevor?
No, I mean, it's going to definitely be an interesting week here. And as we decide how we should react to this new variant and the sell-off of that, you know, I hesitate to sort of suggest what is going to be the outcome of that. But the market is a very skittish place, and we reacted very, very strongly to that news, which shows in itself that it's very skittish. The VIX soared on it. Yeah, it's a frightening prospect, but maybe overstated, you know, to say, oh, we're going into recession and it's all over, in a terrible state. And we were wrong to say the world was getting a bit better. But we'll see, and we'll know during the week, I should think, because scientists are getting grip of these things pretty fast. So I wish you the best. Be careful out there, and may the trend be with you.
And also,
thanks, Dan, for looking after us.
Thanks. Bye, everyone.
Okay. Bye-bye. Thank you.